A large exchange is now moving from the US. We have news on Gemini and some updates that they're giving their clients. We also have a big bank here in the US that is now buying up crypto assets, and we have a crypto that just launched a big new feature. So we're going to cover a lot in this video. Stay through to the end. I'll try to keep it as short as possible. Now, the top link is to the Patreon underneath the video. I made an exclusive video here today on a stock that I sold, one that a lot of people actually like, and one that I bought here today. And I also made early access to a video that I will be posting on the channel very soon. If you want to sign up underneath the video, you can get 16% off on an annual subscription. So definitely check that out if you want to know what I'm buying and selling and get videos sooner than everyone else a lot of the time. Now, we have some news. Bankruptcy judge to decide if Celsius or clients own crypto. So this is just coming out yesterday. Apparently, Martin Glenn is going to decide if crypto that was put into interest-bearing accounts before the firm filed for Chapter 11 belongs to the depositors of Celsius or to Celsius itself. And Celsius is now asking permission to sell $18 million of crypto in order to keep paying their bills. So this is, again, why you want cold storage wallets. I mean, with all this fallout, the fact that Celsius has the courage or the balls to say that they need $18 million worth of crypto to keep paying its bills, you would think that they could just have a couple lawyers or a decent number of lawyers, a couple employees left. They already filed for bankruptcy. I don't understand why they are trying to spend this much money. On the other hand, I totally understand it because some people are probably just trying to get paid out. But the fact is, you need cold storage. There's links to Trezor underneath the video in case you want cold storage. They give free shipping through the end of the month. Now, Cameron Winklevoss is now giving an update on Gemini. They're launching a new page that aims to bring more transparency to the process of the earn users to redeem their funds. So every Tuesday and Friday of each week, they're going to update the page until a resolution has been updated. And right now, they still have ongoing conversations with Genesis. And here's the page. So the last thing is that they launched the earn update page. Before that, they engaged legal counsel on behalf of the creditor committee and so on. So this will be something that if anyone has money that was on Gemini Earn, they can continuously check, which I think is positive that they are updating us. We also have news that Nexo is going to exit U.S. market after facing regulatory scrutiny. So basically, they said that they are sick of continuing to try to work with federal regulators in the U.S. and just reaching dead end after dead end. They've been doing this for 18 months, and they don't feel like they're giving a good sustainable path forward for these types of companies. Now, there were several companies that had an earn program, kind of like Nexo, that the government just said no to. They think that they're unregistered securities. So it's hard to determine exactly whether it's just that Nexo was told no, or if it's actually that the U.S. wasn't explaining to them that their product was security. I think for the most part, these were securities or are securities. If you get an interest rate on your crypto that's made from lending out to other people, that I think is a security. It's not used for fees or anything like that at that point. So it would make sense. But I think the U.S. really does have to just come out and say, hey, these are securities and these are commodities, and really lay out what a commodity versus a security is in terms of cryptocurrency, because they are going to stifle innovation. Chainlink launches staking to increase the security of Oracle services. So this happened today. This is part of their Chainlink Economics 2.0 effort that focuses on security and sustainable growth. This is the beta version, so they are still launching early systems of this. But this is positive. You will get up to about 5% or so if you stake your Chainlink, which I think is positive. Chainlink is obviously a very promising crypto. It's the best Oracle in crypto right now. And they are also helpful for proof of reserves, which is really important as of now as well. So good news for Chainlink. They did move up on this news. Actually, before today, they were up about 25% over a few days because of this excitement of their staking going live. Then we have news. This is really the big news today. Goldman Sachs reportedly looking to buy crypto firms after FTX collapse. They say here that they're looking to invest millions to purchase or invest in crypto firms while the prices are low. And they say that the big banks are seeing opportunities in the space as the FTX collapse highlighted a need for more regulation within the industry. They say that it's at, again, a more attractive valuation. And actually what I saw on other articles is they're talking about not just millions, but tens of millions of dollars, which these companies make billions of dollars. So it's just a small part of what they actually could invest. But the fact is they are looking at this as a profitable market. And the reason for that is there are really profitable businesses here. Let me just highlight two right here. This is GBTC. A lot of people know that there's a huge discount in Grayscale's Bitcoin product right now, and this is causing some fear in the market, causing a little bit of stress and distress. But the fact is, even at a $6 billion market cap, even with this discount, the market cap's $6 billion, and they charge a 2% annual fee. So that means that they're making $120 million a year in fees from this. So that is a really profitable business in crypto. Another one that's even more profitable is having a stablecoin. Look at Tether right now, $66 billion market cap. And of course, there's a lot of fear over whether Tether actually has this money. Let's say they do, and they keep 20% on hand for any kind of expenses, right? Or any kind of redemptions. They have, let's even bump that up. Let's say they have $15 billion in reserves, just in case, stuff hits the fan and they need their money out, or there's a bank run or something like that. That means that if they have the rest in a 3.5% treasury, $50 billion, that means that they make $1.75 billion a year in pretty much risk-free income just from the US Treasury. They don't have to go invest in 100x crypto projects. They don't have to create Ponzi schemes. If you have enough AUM and you just put it up and get money from treasuries, you can make billions of dollars in this industry. Similar to what the banks do, but you can run it a lot leaner with these kinds of crypto assets. So it is a really interesting time for some of these companies to be looking at crypto companies, because some of these business models are highly, highly profitable, and they don't have to be small scale. It doesn't have to be that they're investing in some $1 million crypto or something like that. They can buy part of these companies. They can buy business models. They can start businesses and make millions and millions, if not billions of dollars. And we know that there's a lot of adoption happening right now as well. I wouldn't be surprised if some of these companies just try to get more exposure to cryptos themselves, and not just to the crypto companies, but hold on to some of these cryptos, right? Like Bitcoin, which is going to be here for a long time. As kind of a hedge against the US dollar, it would make sense to me for them to have some exposure to Bitcoin. If you want to know why I'm buying or selling, or get exclusive videos, check out the Patreon link underneath the video, and definitely check out the links to Trezor so you don't have your crypto taken away. Thanks, and I'll see you in the next one. Bye.